I'm going to countdown. Hit the thumbs up button.
And fears. Tune in daily, don't miss a single show. Sign up for the news.
Morning, Nathan, Rosie, Karen. Morning, I need to just turn this off. Got that one done. Okay, I'm just going through my tabs just to make sure I got nothing open that I shouldn't have open. Seeking Alpha, there we go. I'm gonna do this one. TrendSpider platform. And restoration hardware. Okay. I've got the 4-hour open. I've got this opened up. Okay, let's come back to end scene. Okay. Oh boy. Wah, 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 wah. Morning, Josh. Did you get into open prior to the pop, Nathan? I mean, here's the thing. If you believe in open, and I do, and I don't know why I'm not buying this. I have no idea why I haven't bought it in the 5s. I have no idea why I didn't buy it in the 6s. But I've gotten, they basically announced a new CEO and board seats and funding and a lot. So it popped 40%. It was up at near 8. You know, we can look at it last night. 5 minutes. You can see last night at about 4:30, 5:30, I think. I mean, it just popped. It went literally from $6 all the way up to almost $9. I mean, it was nuts. Now it's lost. It's mojo a little, but that's normal. I mean, you know, if you look at a 5-minute chart, let's just look at in after hours. Let's look at a 65-minute maybe. I mean, maybe we'll go to 1 hour. But if you're looking for support, Nathan, just to kind of, you know, guide you a little bit, I think that right there, I mean, I think that $7.30 right there, I think that's where, if you need to buy it under, I think that's where you buy it under. So, but I don't ask me why. I mean, you know, part of today is going over FOMO, and I've got so much FOMO on half the stuff that I've gone over, and I just haven't necessarily participated in. So it is what it is. But good show today. Let's see, scans. Let's do some scans. Morning, Scott, Wendy, Jennifer, Rusty, Pedro, T-Drip. Open's a good one. I mean, honestly, I don't know why I just don't take $10,000, $15,000, $20,000 and just throw it in there, because I don't believe it's going to zero. So yeah, they have those all the time, and I love them, because here's the thing. You log on to those free webinars from Seeking Alpha, and you see how that man, just a genius, throws it up there and just uses the platform that you have access to. It's kind of like, you know, the folks that get TrendSpider and understand how important it is. And I got a big TrendSpider strategy for you. Google right now, if you're listening, Google right now, turtle traders, and just go and read up, as Perplexity, who were the turtle traders, and get the summary from them. They turned $5,000 into $175 million. And FYI, TrendSpider just built that strategy for you to import. Supreme Leader. I mean, you're reading a lot of news that says AMD is going to do bad. Why? I mean, it's risk reward. Am I sure of things? No. Alpha Pix is not, AMD is not part of Alpha Pix. Remember, Alpha Pix is a portfolio. Seeking Alpha is the actual platform. Alpha Pix is the portfolio. But AMD, I just think it's going to, you know, again, is AMD higher or lower a year from now? I don't know. But if you put your money in there, I don't own it currently. I own a lot of NVIDIA, but I've been very clear that I think over the next year, I think AMD outperforms NVIDIA. So if both of those are down, which one outperforms? I don't know. My guess is AMD. Morning, Larry. Rosa, kudos. But Supreme Leader, honestly, if you're reading and you're scared of AMD, then the risk reward is not worth it for you. If you're doing your own research and you're comfortable with AMD, then throw your money in there. But nobody can tell you, yes, it's going to do good, or no, it's going to do bad. Because nobody knows. Nobody knows. All I can do is give you my thoughts, and that's it. Microsoft, I got this alert yesterday. I debated, should I put it out there? But I think Microsoft under 500 is a screaming deal, to be honest with you. But it's, you know, again, you've got to be comfortable with that one. Let's go to leveraged ETFs, because are we seeing a shorts? No, the Microsoft up one. Leveraged ETFs, MSFU, low cost Vanguard. Let's see if there's any in here. VTV. We'll put that in. I don't need to separate that out. VTV is the value ETF. Again, it's kind of for Walters of the world sitting in their rocking chairs. Spider sectors, XLI, XLU, utilities. Utilities gets a bump. I mean, again, utilities have come down. So even though yesterday was a big day for utilities, want to know why? Because freaking Oracle is saying, hey, there's billions of dollars. I'll go over my thoughts on that stuff, because I think you're going to hear a lot of kind of, ooh, we're going to do bad and bubble stuff. And I was reading a lot yesterday, and you're in a bull market until you're not. And even one guy that I follow, Hugh, he goes over, hey, I've been bearish for 6 months. So he's missed out on the ride. So you just, again, risk reward. It's not a right or wrong. It's risk reward. And that's part of staying out of the realm of FOMO. There's a lot of FOMO out there. I mean, there's a lot that I've missed out. There are more that I've missed out on than I've actually taken. Even as like people tune into me, I'm no different. I have tools, and I look at the tools a little differently. And you may not have the tools, and that's fine. But the reality is that nobody can tell you exactly what's going to happen. And anything that anybody tells you, it's thesis and it's work, but there's also a lot of luck to it. you know? So yeah, and don't feel like, here's the thing, Supreme Leader. For many years, I used FinViz and Fidelity and just the brokerage firms like research, and I did fine. I just think that Seeking Alpha has a leg up. And so when you have enough money, you know, I go over it. It's about $1,000 a year that I was paying between, it might be like $1,200, but between Seeking Alpha, Alpha Picks, and TrendSpider, when I was paying, it's about $1,200 a year. And I have no doubt that when you break that down per hour as time savings as to where I was, okay, I'm able to get in there and I'm able to look at this news and I'm able to decipher it quickly, easily, and understand and not spend hours on stuff. I was super, you know, the dollar amount makes no sense to me. Why, if you have, you know, 100,000, you hear Fisher Investment say, if you have a portfolio of $500,000, you should give us a call. If you have a portfolio of $500,000 and you're not paying for these tools, you're not managing your portfolio. You might as well go in VOO. I mean, again, Fisher Investments, to me, I've never reached out to those guys. I don't understand why anybody would, but risk reward. People want security. So why is WLDS wearable devices up $407? What the hell did this? I mean, that's just a pricing of 4 million registered direct offering and concurrent private placement. I mean, it's up 30% again this morning. So, Jacob, I'm not 100% certain that I trust Fidelity to make a good app. I as a high net worth guy, I get access to Fidelity, some really high level folks that can kind of usher stuff out. And I have complained about in the years before I was with TrendSpider, and I really loved TrendSpider, I was complaining to them about Active Trader Pro, and I just didn't like it. I said, you know, you guys have to get better and blah, blah, blah. I even had most of their programmers look at TrendSpider, and I said, this is what you want. And they told me, hey, we can't be everything to everybody. So they try and just be as good a broad platform as possible. And I get it. I mean, that makes sense to me. We're going to go over this. This is this is 9 minutes of your time. Howard Marks. It unbelievable. Just unbelievable. I don't have too many new stocks today. Let's see. We're going to turn off the volume. That's Mike building the Turtle Trader stuff. Why is the job list? Oh, I didn't hit return. That's why. Okay. If jobless claims and inflation, that's going to be the news story. I mean, I think you're going to see very much like yesterday. The market's not. I mean, here's yesterday. We saw, we saw the spike when the PPI came out. And oh my God, there's no inflation. And then people realized, oh shit, not good. I think you're going to see a lot of the same thing today. Just to be perfectly honest with you, I think you'll see a bunch of that kind of stuff. Because in pre-market today, if we just look at pre-market, you're seeing it spike up. You're seeing it perk up. I think you're going to see the same thing. If you wanted to know where a peak was today, try 583 to 584 on the NASDAQ. It's just kind of, I think if you break above there, I think that's what we talked about yesterday as well. But Fidelity is free, and it's really honestly, I made millions of dollars just using those free tools. So don't think that you need these tools. I'm just saying from a standpoint of myself, and the way I use these tools, it's far better for me to use those tools. So, but that's the whole show. I mean, we're going to go over a lot. The turtle traders is going to be kind of a thing. So I haven't imported it into my setup yet. I plan on doing that either today or maybe over the weekend even. But nothing in the core portfolio like shocks me. I mean, there's nothing up more than 1%. Nvidia's up. Tesla's up 1%. I mean, Tesla's been an interesting one because you had this buy at 354 and you're at 351 right now. I mean, it's traded sideways since May. In May, this was at 354. So, Uber's kind of doing that same thing. This is since May. It's just kind of been sideways and you've been better off trading it. But I do think it gets to $100. I just think some of these you've gotten to exhaustion level, and you can see from a 4-hour algorithm standpoint how that $100 right there is probably support, and we're running right up against this 116 resistance level. So it needs another catalyst to get up there. But when you look at the weekly, it's stretched. So maybe we get back down to 100. But I'll go over today. I went over that their conference, and it's just they continue to knock it out of the park. So I'm going to make another thesis on Hood. Okay. Micron's going. I mean, listen, I brought it up yesterday. I don't own this one. I should. I mean, I absolutely 100% should. 4-hour algorithm trades really well. And it moved to that. And I made mention yesterday, it moved to a strong buy right around that 122 mark. And the 4-hour algorithm got you in at 122, 121. And it's taken off. And so, you got a few gaps in here that might get filled on the way back. But it's been that's a good stock. And you look at the weekly on this one, it's not as stretched as it was in 2024 when it hit highs. Again, what's the high? 157. You buy at 140 today. What's the high? Probably 150, somewhere in that neighborhood. I mean, we go all the way back. Let's look at a monthly chart. Because where do you have to go back to get that $100? It's back to 2000. I mean, it is literally back to the year 2000. So, when your brother's electrician starts buying stock, we're in a bubble. Penny, stop it. Okay, I'm going to hit the podcast now. Good morning. It is Thursday, September 11th. Big show for you today. Big show. And it is September 11th. So, I was in California. My brother was actually in Manhattan. Took him like 19 hours to get off the city. But again, condolences, memories, whatever makes everybody feel comfortable. Plenty of my friends have, loved ones that were missed, blah, blah, blah. So I'm of that age, and it's been quite a while. So as we lose a little focus, just remember it is time to just remember that. Now, we're going to talk about inflation and jobs because obviously CPI just came out. I'm going to talk about the legendary turtle traders. If you are listening right now, pause this and go and Google turtle trading. Okay, turtle traders. These guys turned $5,000 into $175 million. Okay, the strategy is now in TrendSpider for you. A simple alert. When to buy, when to sell. It is simple. It is easy. They make it simple. We're going to go over some of the comments I got yesterday. FOMO, how do you handle this? Oracle, I'm going to give you a playbook on Oracle because it kind of leads into, are we in a bubble? And then portfolio management, because that was what I was doing. And I'll finally end it off with Hood and one that I missed, Open Door. Because there was big news overnight on Open Door. And we'll talk about scans and things like that. But let's talk first. Where are the markets? Well, you had this buy-in here right at 580. We're trading at 582. The market's pumped a little this morning. If we look at just the after hours, the pre-market right here, it pumped. Why? Because consumer inflation sped up. You can see the headline. It speeds up month over month in August. Core CPI holds steady. Ignore the headlines. Don't let the headlines worry you because inflation is kind of under control. It's not 100%. It's not at the target of 2%, but it's pretty much under control. That's not what to worry about. The reason the market popped is because initial jobless claims just soared. Okay? Up 27,000 from the prior week. The jobs market is what's concerning. And what does that mean? That means don't fight the Fed. Okay? This most likely pushes the rate cut not to 25 basis points next week, but to 50. And if it is 25, then you get a third one this year and probably 75 total basis points. Now, I will tell you what you need to worry about. And if you remember, there was a compound episode at the beginning of this year, end of last year. I forget exactly, but there was an expert on, and I forget his name, but he said, hey, when Josh and Michael asked him, what are you most worried about? He said, well, if the 10-year is under 4%, he goes, I worry about the market because remember, he said, if the 10-year bond is at 3.75, I'm worried about the economy. It's not always good to have a bond market that's down like that. It just means that there is something wrong. Okay? So remember this speech as I go into quote unquote later. Is this a bubble? Because that's going to be an issue. The 10-year bond is going to be an issue. My prediction today is that we see something similar to yesterday. You can see yesterday we ran into the open and then it just lost it. Why? Because people are realizing that a Fed cuts rates when things aren't good. It's not like a rate cut automatically makes the economy just strong and supercharges it. No. If the jobs numbers are that bad and we are in a weak job economy, you could be looking at recession. Understand, I say this with the caveat, we are in a bull market until we're not. And when the 4-hour algorithm tells me to buy, I've been buying. Did I buy at 580? Yes. Okay? But you need to have a strategy. And so one of those strategies, if you want to look up a strategy, like I said, you should have paused this and you should look up the turtle trading. Okay? A successful market legend. These guys turned $5,000 into $175 million. Okay? And they basically give you this strategy. It is a custom indicator. It puts it into your TrendSpider setup. It's a whole video. This is 12 minutes. Go and watch it. Okay? And then just Google and read all about the turtle traders. If you have a program that can do the turtle trading and you're like, okay, that's fine, I can do all of this, then that's okay. Go and have at it. But if this strategy interests you, go and get TrendSpider. How do you get TrendSpider? You go to Linktree, linktr.ee/dailystockpick. It is in the description of every platform that you're listening on. And you go to the top link, and the top link will lead you over to this page. And you can get TrendSpider for $50 a month. You can even try it for less than the price of your lunch today. For 2 weeks. See if you use it. Import the turtle trading. Understand that 2 weeks is just a trial. You're not going to make a ton of money over 2 weeks unless you have some type of strategy, and you can import it from the TrendSpider store, but you're going to need a strategy that works on a shorter timeline. But again, if you Google the turtle strategy, just Google it, turtle trading, or just go to my newsletter today, and I'll have this all linked. It's a legendary strategy, and for the first time, it is in TrendSpider. So if you have TrendSpider, you're one of the hundreds, if not thousands of listeners that have TrendSpider that listen to me. You can just go over to TrendSpider and import it into your setup. I will have it in the newsletter, a link to import it. Okay? Now, I want to go over some comments yesterday, and not bad ones, because there were a few comments yesterday. The first one, people love alpha picks. People love alpha picks, and they say, hold on, there's a lesson going on. Oh. Okay. We're gonna just start this over again. Like I said, people love alpha picks. They love it. They were commenting how great a portfolio. The performance, that's all you need to know. Alpha picks performance, 217% versus 69%. One person on Spotfiy said they bought IAG. Okay, IAG is not an alpha pick. This is one that I brought up yesterday that I gave to paid subscribers, and the reason I found it was on top stocks right here. What's the top stock today? It's COMM. Second one I brought up yesterday is Micron. Okay, but IAG is still a strong buy. It was up 8% yesterday. Is that the pump from this podcast? Maybe. Who the hell knows? But this particular person took this research, went in, said, ooh, it's a strong buy. I'm going to buy it. Bought it. They're up 10%. Again, in one day, since it was brought up as a highlight as a top stock, it is up year to date since I brought it up 111%. I don't own this one, but I do own 2 gold stocks that were part of Seeking Alpha's either alpha picks or top stocks. One because it was an alpha pick in June. It's performed exceptionally. And the second one because it was a top second half 2025 stock. But gold for me is a clear winner. Now, how do you get these tools? It's the bundle. I mean, I want to say it's the bundle dummy, but it's premium and alpha picks together. You save $159. Say you don't want alpha picks and you just want the top stocks and you want to do your own research. That's Seeking Alpha Premium. You get a free 7-day trial and $30 off. Go and at least look at the top stocks. Okay? Because there are quite a few top stocks. One person yesterday invested in PSIX because I said this is the top second half performer. Okay? Again, the support is $78, so that's where it should be. It was down 3% yesterday. Are you getting into this one? Because year to date, it's up 201%. 6 months, it's up 230%. And go back and listen to yesterday. It's still a strong buy. And have I mentioned another one? Okay. This is a top 2025 stock. It's a top second half 2025 stock. And it's a top alpha pick. It's Credo. It was up 10% yesterday. Okay. And maybe you don't have Seeking Alpha. Maybe you just have TrendSpider. Okay. Well, TrendSpider got you in at $115. The 4-hour algorithm is coming off a 127% gain in this. Heading into this year, I can show you exactly. It had a 43% gain, then a 52% gain. And it had some trades in here, which, by the way, even if you bought and held these because it was such a quality stock, again, you're up. Now, my question for you is, if you've listened to this podcast, I have brought this up many times. Why is it not in your portfolio? I can't answer that question. Only you can, because I have it personally in every single portfolio I manage. So whether it's in your, and we're going to go into FOMO. This is not to give you FOMO. This is not to say, go out and buy this one right now. This is to say, if you're not in this one and you're listening to this podcast, it has been a big winner. Risk reward. And you need to journal why you haven't gotten into this or why you sold it. I sold at 97. I waited for the 4-hour algorithm. I got back in at 102. It was only 50% of my holdings in one portfolio. But again, I got back in. I used the tools that have been successful for me. Okay, one of the other tools is Apple. Okay, and I mentioned this earlier this week. It was a sell the news event. Yesterday, Apple was down 3%. Now, I lost, $150,000 on my position with 3%. I was down big. I don't exactly know, but I did move a lot of my Apple into QQQ. Why? Because I do think that over 1 year, Apple is up 10% from here. But does that beat the Qs? And if it doesn't, then I want to make sure that I have access to everything else. Apple is the number 3 holding in the Qs. Now, the Qs were actually even yesterday. It was up 0.03. And so earlier in this week, I moved everything to the Q, a lot of Apple to the Qs. And I will buy back Apple as it starts to show it can get over that $240. Again, going over to the charts here, Apple, was it a sell in the 4-hour algorithm? Yes, with a 3% gain. So if you don't have these tools, maybe you didn't rebalance out of Apple and into QQQ. And I want to point out another stock winner that I pointed out, okay? I've gone over this before, but Jack Ma's Ant Group unveils first humanoid robot with medical and culinary skills. It pushes BABA up 3%. Now, this is a hold. It is a hold. It has moved off of sell. I think it was sell, back here somewhere. There was a one time when it was sell. But what was Wall Street's price target? It's 164. 164. Now, the problem is that they have been bringing revisions down. You can see. So that part of the score is not good. But when you look at this technically, okay, and I'm going to look at this technically, I put this in at 119 was the support. Well, where did it pull back to? About 120. Gave you a buy here at 124 on August 25th. I'll just point it out. It's trading today at 143. Again, the 4-hour algorithm, I like. Now, would I buy it here? No. I'm not that big into this particular stock. I have been burned on it before. I've also made a lot of money on it before. But when I look at this, it's trading right up against that March high. And when we look at a weekly on this one, and we see January 2022, and you see right there, again, if I just put this little line right at about 140, you'll see it popped up there in March and it pulled back. So I now would like to trade it between 119 and 145 if it doesn't hold again above that 145. So again, it's about strategy. It's about understanding the fundamentals of a stock, which is seeking alpha. And you can see the valuation is a D. But from a PE perspective, it's not bad at all. It's the growth that's the problem. And it is the Chinese economy. And if Apple's going to grow, the Chinese economy needs to grow. So it's all kind of correlated. Now, I do want to point out something. FOMO. It is a real thing. I got comments from people yesterday about FOMO. I missed out on this. You're going over all these winners. I missed out on this. Don't be fooled into doing a trade just to trade. You need to understand risk. If you watch one video today, it is fantastic. It is 9 minutes. Okay. After you watch the turtle trading video, go and watch Howard Marks on this video. I will post it in the newsletter. But don't be fooled into getting into trades just to try and make money because you missed out. You need to understand risk reward. You need to journal things. You need to understand the technicals. You need to understand the fundamentals. Make sure you have a system that works. And if for some reason, like Open Door, I will go over Open Door later, I missed it. It popped 40% overnight. But we may be in a bubble. And I can tell you, a lot of people look at insider selling. Larry Ellison last night became the richest man in the world. He replaced Elon as the richest man in the world. He added a staggering amount, like $100 billion, $200 billion to his net worth. But this was funny, okay? And I'll point this out. Safra Katz, she's the CFO. And this is public record. And if you go to Oracle, okay, Oracle today, by the way, is trading at $328. Yesterday, I think it went to $340 something. If you just look on FinViz, and this is free, you can go out and look at it whatever platform you want. But she sold billions of dollars of stock back in June. Billions of dollars at stock at around $200 per share. This is the chief financial officer of Oracle. Insider sales don't always mean things will go bad. It doesn't mean, oh my God, they're selling the stock. And that was in June. And so people most likely freaked out. If we look at June, okay, the June was good. It popped on earnings. Boom. Didn't freak out, but it didn't exactly rise. Now here in August, you dipped down from about 250 down to 227, and then you popped back up to 3. Yesterday's high during the day was 345. But I want to point out one thing about Oracle, okay? Oracle, and specifically the earnings. They missed earnings. They missed earnings. And I want to point this out to you. This is from her, from a pal who used to run a tech fund in the old days. And again, these are boomers of Wall Street. Understand this. These are boomers of Wall Street. Doesn't mean that we are in a bubble. But this particular person says, I have never seen anything like this, even in the peak of .com insanity. At least back then, companies were blowing out revenue and earnings to the upside. They weren't. It was all financial manipulation. This one, they actually missed on revenue and earnings. A mega cap company with a stock going up 40% and adding $300 billion of market cap in a revenue and earnings miss. Larry has learned from his buddy Elon. Again, Elon is the master of this. Just make crap up about the future. I'm still waiting for self-driving Teslas that were meant to arrive years ago. Watch the other public companies fall right in line and start pulling oracles now. The good news, AI can draw these charts. Again, it's just a thing. Are we in a bubble? And I want to point out, if you hold VOO, you have Oracle. So it's not like you're missing out. Oracle is not part of QQQ. So if you get FOMO over these things, again, understand, insider sales, this person probably has way more FOMO than you. Are we in a bubble? Probably not. And then the real FOMO comes from someone turned $10,000 into $8 million on Oracle calls yesterday. Are we? You're going to hear a lot of news from analysts, from folks calling the bubble. We are in a bull market until we're not. And so that's why you need to keep an eye on the charts. The charts will tell you, go simply, when in doubt, zoom out. Go simply to a monthly chart. Does that look like a recession right now? No. You have green candles all the way from April for every month in QQQ. Every month. So as you hear these people start to talk about the bubble, just understand it's not always a bubble. Now, I want to point out to you something, because one thing I was doing yesterday is I was managing my portfolio and I was reallocating stuff and I was spreading stuff around, and specifically in Fidelity. And I'm not going to show you this chart, but make sure you have something like this, which is a 52-week slider. And you can see VOO has traded from 442 to 601. And we're trading at 601 right now in pre-market. Okay? As you see it move to that 52-week high, understand that that is the potential that you can maybe take some profits. But I would not put that money into cash. This is part of portfolio management. There's a couple of things that I look at. It's the slider and the ones that get up towards the top. I look, is this the best place for my money, or is one that's over to the left the best place for my money? Look at your thesis on the stock, because I also look at the percentage of account column. Okay, the percentage of the account column tells me what percentage that current holding is of my overall account. If I have trades, I don't want them to be more than 5 to 10% of my portfolio. Again, they're growing in there. So if the thesis is not, hey, I'm going to buy and hold this forever, like it was for me with Apple, I don't want it becoming a too large a position in my portfolio. So those two columns, I feel like they've got a good handle on the portfolio management right now between those two columns. I can't manage a ton of positions. This goes to your portfolio management. If you've got 82 positions that you're managing, that's too many if you have a full-time job. If you're a billionaire sitting on the side, you can do 82 positions. You can do it all the time. With this podcast, I can't do more than 20. So I can't manage those things. So it's understanding what you can manage and using the portfolio as a tool. A great example is a few weeks ago, I sold CRM. I don't remember the price that I sold CRM, but we look at 1 month, it's up 0.56. Okay? The money that I took from CRM in my Roth, okay, I put into IREN. Now, it was a risk. It was an absolute risk. But versus 0.56 in 1 month, I'm now up 77% in this one. Where was my money best placed? And this is risk, but the reward is there. I just saw the history of CRM. I didn't like the way it was moving. I didn't like the earnings call. I didn't like their forward stuff. It's software. And I said, you know what? This is power. This is data center. It's got a better valuation than Nebius. And I saw what it could do. Now, IREN has grown to be 9% of my portfolio. Even after I locked in 50% profits last week, I sold this at 28 and change. It's now at $33. While I would have loved to get back into this, I didn't, and I'm looking to trim it even more. The risk reward. For me, I love this stock, but that's a bit large of a position for my risk tolerance. So I have to keep my eye on it. And again, I'm keeping my eye on it. So it's not something where I just take my eyes off of it. I have alerts set up on this whole thing. But kudos to those that took this trade and have stayed in it, because my current position is up 82% in just less than a month. And now I want to go into a thesis that I have on Hood. And I will outline this in the newsletter. But again, it's a hold in the quant. And we're seeing Hood, particularly right now, running right up against a previous resistance right there at 116. It's trading at 117. But I want to go over this because last night I was able to actually listen to some of the Hood Summit. And I had AI summarize it for me, okay? They are going to be a full-service trading ecosystem, taking on not only interactive brokers from a trading perspective, but they will take on the money managers like JP Morgan and Morgan Stanley, all of the traditional Wall Street folks. But this is the key. They brought up multi-account support, organize portfolios by theme, goal, or asset class under one login. Okay, so they're going to be the central focus where it's a one app, super app for all of your investing. They're going to have futures on Legend, meaning that their platform, they have a desktop platform called Legend. Live access to 40 CME products on the desktop. Again, taking on Interactive Brokers for those heavy traders. They are having short selling coming soon, rolling out across mobile and their desktop platform. Cortex AI powered tools, custom indicators. Again, TrendSpider has custom indicators, but so does Robinhood. It's launching for gold users. And this is the key, okay? Robinhood Social, a built-in trading community set to rival X, Reddit, and Discord. Now, I run a community. One thing I do know is that the trading game community is important. So everybody that listens to me, they like talking in there. They like chatting it up. I know people who have come off Twitter just because they said there's too much junk in their feeds. They don't like Elon. Robinhood is going to take them on. What most likely, Hood is going to get limited to this just stocks. There's less need for ad revenue because they're making their money off of your money. So it should be interesting. But again, I like the aggressiveness of this company. And I think they're doing it right. So yes, not only am I not selling Hood, but I will be looking to add to Hood. I like it. And one name that I saw yesterday that I really liked, because I did a little bit of research, was Bloom Energy. And look at this one. I brought this one up before. That 43, it blew right past it. The 4-hour algorithm just since June is up 215%. And let me reiterate that. It's up 215%. Bloom Energy. That's a very simple one. It's a hold. Seeking alpha analysts say it's sell because of valuation. Wall Street's price target, 39. That's 37% below where it is today. 18% short interest. Just FYI, this is a short squeeze. Again, I like power. It's energy. This is a good one. It's ranked number 2 out of 13 in the heavy electrical equipment. Guess what's number 1? The one that I like, PSIX. Now, I recently published an article on the power stuff. This was back on, let's see, July 30th. I put that in, and it was on power. Look at the change since I posted that, okay? VST, you're up 7%. CEG, you're up 7%. AGX, you're up 7%. GEV, you're up 5%. CCJ, again, that's just yesterday's gains. These are yesterday's gains, just since I published that newsletter. So it's not just an Oracle story. This is energy name, because to run the data centers that Oracle is building, it's going to be power. They're pushing through all of this construction. They're pushing through everything that needs to build a data center. They're doing it, but power is one of the big ones. We've heard it from Meta before. This is the bottleneck. So again, I gave you all these names because I went into perplexity and I did a prompt and I did the research. Now, I will tell you one that I've missed out on, but I think a lot of listeners are in on. It's Open Door. I almost bought it yesterday because I had so much FOMO, but I didn't. I knew this was coming because, you know, the Jackson guy who we follow, and I told you to follow Eric Jackson on Twitter. He said it. We're looking for a new CEO. They got a new CEO. They got board seats. And they got funding. Again, he's pushing it to $82. He was right about Carvana. This is a YOLO where you just put money in and you don't worry about it. It will be down. This one will come back down. And if it doesn't, I'm going to miss out on it like everybody else. But again, this is just a YOLO. It's risk reward. You don't throw your entire portfolio. Even if this goes up 1,000%, you don't throw your entire portfolio into this kind of stock. Okay, it's up, let's see. It's up since the 4-hour algorithm got you in 129%. in 28 days, that's fantastic. It will come back down. Where would I be looking for it to come back down? Probably around this, $7.30, somewhere in that neighborhood. I think it's trading at $7.59. Now, I do want to point out tomorrow, something that I'm going to go out tomorrow. And if you're listening to this, just go out and do your own research, okay? Because I'm going to pull up Open Door. And we're going to scroll down here. And there's a section here in Seeking Alpha called Risk. Where is it? Ownership, peers, risk, right here. Okay. They have short interest. They have shares short. They have days to cover. Then this beta mark. Okay. This beta. This is a big one. Tomorrow I'm going to go over this because I'm sure it's in your platform as well. This isn't exclusive to just Seeking Alpha. But understand what this is. This is your risk reward. Okay? Seeking Alpha has the Altman Z-score, the beta. They have the days to cover. They have the short interest. They have everything. This is your risk. So I'm going to try and go over this tomorrow. I do look at this from time to time. I am by far not an expert. So I'm doing my homework. I want you to do your homework with me. See if you come up with a different understanding than I have. And maybe you do, because again, I'm not an expert at this, but I'm going to talk about it tomorrow. Now, some stocks that have bullish entries in the 4-hour algorithm. Microsoft. It's trading at 501. I would say anything under 500 on Microsoft, probably a pretty good risk reward. You've got a value ETF. No. That's not value. There was a value ETF. I'll figure out the symbol. But one that I really like, and I got a question about this morning, AMD. AMD 160. Where are you trading right now? 159. I've said that 164 should be a buy below and sell higher if you'd like. So where's your risk reward on that one? Are the chips going to come back down? Are we heading into a recession because of the interest rates being too high for long? Is the jobs market going to come down? You don't want to buy something that is this risky if we're heading into a recession. So you have to determine, is the risk worth your reward? Because again, Wall Street thinks that this is a $185 stock. That's a 17% upside. And there's 52 analysts that cover this. Now, the revisions haven't been great. 21 up, 18 down over the last 90 days, but revenue 39 up, none down. So again, you have to decide. And I'll have the entire list of scans that I just did. I'll have them in the newsletter. If you have any questions, again, go and look at the Turtle video. Go and look at the Howard Marks video. All of it is out there for you. And if you didn't get into any of these things, if you didn't get into Credo, if you didn't get into PSIX, find where you want to get in. Find a strategy. It's that simple. I am not trying to oversell you these tools. They will not make you a fantastic trader. They will not give you more certainty. But what they will do is provide you an ability to quickly assess what you're looking at and understand the risk and reward. Did I know IREN was going to be up 80% in less than a month? No, but I took the risk. And with the risk comes reward. And in a bull market, it's going to make everybody look like a genius. I am not a genius. But everybody who's telling you about the bear market, they're wanting you to fear things. We are in a bull market until we're not. And if you get in early enough and you go up by 100% and you have a 40% pullback, you're still up. So it's maybe not the greatest capital preservation to do things like that, but over the long term, remember the story of Bob. And if you haven't read that, go out and read it. It is the story of a guy who just invested 100%. He didn't dollar cost average. 100% went all in on the market at exact highs. Still managed to retire a millionaire. So it's time in the market, not timing the market. So again, if you have 100% gain and we pull back 40%, you're still up. So be careful, understand what you're investing in. I will talk to you tomorrow. See you, bye. Wah, wah, wah. Okay. I gotta go in and do this iMovie stuff. Let me save my portfolio way down. let's see how the portfolio is performing. Fidelity portfolio is up by 0.5. Pretty good. Pretty good considering probably Apple is down. Let's see. No, Apple's up 0.12, so it's just kind of performing okay. Let's look at the Webull account because we are up 13.7. Not bad. Remember, that got to like 14.5, so it got up there. We're gonna close that down. Now I got to do the iMovie stuff. And it's funny because I have Final Cut Pro and I edit in Final Cut Pro, but iMovie is so easy. I mean, for anybody that's an Apple user, I mean, CapCut I think is easier, but I don't want to pay for a subscription. iMovie's free. We're gonna go in. We're gonna reduce that. Then we're going to auto that. Copy. And then paste all the adjustments. Now I gotta edit it. Bum, 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 bum. Break that down. And then I gotta edit this little break. Take that out. I almost deleted the wrong thing.
Like I said, people love alpha picks. They love it. People love alpha picks. They love it. They were commenting how great a portfolio.
Okay. Boom, boom. And we're going to take that, put that there. And we're going to do, I don't want that. Copy. I don't understand how people work on Windows computers. I love my Macs. Boom, boom. Okay. 9/11 podcast. Pod. There we go. Save. Let's look at your. Pick your poison exactly. Yeah, Josh. I mean, Credo's been great. What is Credo? WLDS. I mean, it's up 44%. Let's look at the after hours. You know, it's shoes. And so I think Crocs is in that, when you look at analysts and you're buying shoes, I mean, does that stock chart tell me I have to buy this stock? There's something wrong with it. And I think, you know, the when it's a sell, the company has earnings per share diluted growth of 68%, while the consumer destruction. So it's, again, they're diluting it's not a good stock. I mean, it's just fundamentally, it's bad. The growth, I mean, 2% revenue growth year over year. You may be buying a bunch, but you know, they're let's see, profitability, 59% profit margin. And I know they're hit with the tariff stuff too. So sometimes in stuff like this, it's a matter of, you know, I actually, Skechers went private, so I can't do Skechers, but we can do Deck. This is boat shoes. And you can see, I mean, both are down. Crocs is down a little more over 1 year. 3 years, Deckers is actually up 91% versus Crocs down 3. So, and yeah, I think kids love Crocs. That I was on Spaces with all the Wolf crew. They're all younger and they're like, yeah, we love Crocs. I'm like, Skechers is it. Am I worried about it, Chris? It's a piece of information, CPI and jobless claims. So, am I day trading it? Nope. You're in a bull market until you're not. And so, you know, there's a lot of green on the screen. So, yeah, Open was going to rip on the Open because I think there's a lot of people who probably have, you know, there's a lot of retail traders who just do buys and do market orders. They're not as advanced. And so when you see a stock like this, you know, it opened up, let's see, at 780 and it's trading at 783. But again, that 727, I think that $7.30 mark kind of makes, you've seen it pop. That probably makes a pretty good entry, but, and yeah, I'm not a shoe, I mean, honestly, I ordered Under Armour shoes. They were giving, for Labor Day, I think it was 40% off. I got 2 pairs of Under Armour quote unquote workout shoes, which I don't like. And I thought about sending back. They have flat soles and no support. I like their running shoes a little bit better. But these particular ones look good. So I was like, what the hell? $70 for 2 pairs. I was like, Great colors. I wear Under Armour shirts. So I'm pretty much Under Armour now. Okay, let's see. I think I'm gonna go. By the way, hit the thumbs up button if you're here. If you've already hit, I probably should have said that earlier, but it does help. Yesterday's particular platform got a lot of help from it. But where are we? I mean, Hood is up 0.79. Goldman Sachs is up 1.2. So financials are doing well. Bank of America, hopefully you bought it under 50 because it's at $50.35. I mean, that's a nice 4 or 5% gain from where I said to buy it. Palo Alto is approaching 200. Alert. Palo Alto is approaching 200. I am probably going to start trimming that one. It's expensive. I think it's getting lumped in with software like CrowdStrike is. But they just, you know, again, it's approaching 200. They haven't grown like I would have expected them to. So it's been dead money for a while. I mean, this again, Salesforce, this one, I think, you know, the positions that I've had just have not been working out and going over it. And is my money better off, you know, Palo Alto Networks? Let's just look. Charting against QQQ. We'll just chart it against the Qs from a long-term perspective. I'll leave the S&P in there. Look at Palo Alto Networks over 1 year, 15%. It's underperforming both. 3 years, it's outperforming both. But again, as you pull in, it's greatly underperforming. 6 months, underperforming the Qs. 1 month, it's doing well. But you want to take advantage of that pop. And for me, again, if I had bought this And thankfully, I bought this in like 2020, I believe, somewhere in that neighborhood. I'm way up on this. But if you bought this, you know, in February of last year, I mean, that's 18, 19 months, and you're just barely up. So, and look at how orderly it does. I mean, it does this. It's definitely still an upward trend. But where's your money better spent? Long term, this seems okay. You know, are you going to be up 10% over a year? Pushes it to 220. It's not a crazy amount. Does it have that in the 52 week? Let's say 210. So, again, all I would do is trim it. I'm not getting out of it. So, okay. I am out of here. You guys have a great day. Have fun. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.